Okay, welcome to the Swing Trading with Cycles channel. We are going to do an update on platinum today. I haven't looked at this one in a little while. We'll also look at XME, which is the metals and mining ETF. So that gives you a little bit of broad exposure. We'll include gold and silver, but really just in general mining, kind of hard assets sort of thing. And we'll also look at palladium as well. So let's start with, and maybe if we have time, we'll look at some associated stocks. So let's start with platinum. So this thing has been in a long-term downtrend for a really long time, but it is starting to break out. And we're going to start with the annual chart. So looking at, where each year is, or excuse me, where each candle is one full year of price action. We'll get rid of all the drawings. So you can see the annual chart actually peaked out in 2008, and we still haven't made it above that. Or I should say, we're still inside that range. And I probably talked about this. Sorry, it added the annotations back. But you can see, the high was 2302 and the low was 747. So that's obviously an enormous range. And so I'll remove the drawings again. But you can see all of this price action is inside that range. Now, we did dip below that in 2020 and then sprang back up. And now this is 2021, this is 2022, really just consolidation. This had broken down. So, I mean, look at this candle. This candle was very red at one point, the 2022 candle. We made a new low below last year's low. So there was every indication that we're going to go test these lows, and maybe we still will, right? We're not necessarily out of the woods, but we've now started to reverse. That said, this is big doji so far. We're very far from the highs, but that is actually pretty promising, right? So that's the yearly chart. If we look at the monthly chart and start to think about, the cycles context, right? We have 3 months of higher highs now, November being the third month, and obviously still a lot of trading to go. We are furiously headed towards that $1,200 resistance level. We topped out in March. Yep, that was the same month that gold topped out and had that precipitous decline. Platinum is now kind of front-running gold. This is maybe a preview as to what gold will look like in a little bit. And if we think about the cycle count, right, that parabolic move in January 2021 was month 11 of a rally that started in 2020, right? So that was the 2020 rally. It topped out, the COVID rally, topped out January 2021, and we've been declining ever since, right? So just to be crystal clear, that range, right? That big candle, that February 2021, let me just, this is January, right? So it's February 2021. So February 2021 had a high of 1339 and a low of 1073. You can see, if you look closely, we're about to test the underside of that range. So again, that is a low of 1073. We're at 1062 now. Not to say that we should react to exactly that level, but right around here is where you would expect some kind of reaction, potentially resistance, right? If nothing else, if we blow through this, that is really telling, right? Because this is one of the places where you'd expect we'd be turned away, because we're already making a higher high above here. And then again, the next big move would be a higher high above that. And so thinking about that context, that was month 11 of a longer term cycle, and we've been declining ever since. We did make a swing low on month 21. We bounced for 3 months, and then we continued to decline and made another lower low. And so that was month 9 since this high on month 3. So I don't want to confuse anyone, but if we just add these together, right, this 9-month move plus this 21-month move makes this just 30 months, right? Think about that, right? So that, if you think about that whole move, the entire move was 30 months, from here to here. Another way to say that is maybe that's your long-term cycle, right? Maybe that was your low in September on month 30. We need more evidence to say it, to know that for sure. We need candles to close, but that's right now, that's what it looks like, I should say, right? I also note that this teal line is a 50-month moving average. We closed a few months below it, and now we've sprung back up, right? At first, we kind of treaded water for, I'll zoom in to make sure everybody can see. You know, for a little bit, we treaded water for like 1, 2, 3, 4 months, 5 months. And then we like, oh, wait, we're out of the woods. No, we're not. And then we went below it. Close, 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 close. So 3 monthly closes below it. And now we spent 2 months rallying back above it. We closed just above it last month. And we'll see how we close this month. There's still a lot of trading left. But that's promising. That's auspicious. And that might suggest that, you know, this was a really left translated long-term cycle that lasted 30 months. It had a high on month 11 and now a low on month 30. Now, we can only know that for sure once we break above this high at 1341, which is obviously, you know, a long ways from here and would be really late in the move, which is why we look at the lower time frames to get some cues, right? But before we do that, let's just zoom back out to the quarterly chart, right? So that was the monthly chart we were just looking at. If we look at the quarterly chart, very, very promising. We have a swing low. So ignore these numbers. I'll actually just remove that. This is a swing low, right? This is Q2, right? Or I should say, sorry, Q3, right? So this is Q1 of 2022. This is Q2. This is Q3, which just closed or closed in September. And so this candle is still ongoing, this Q4 candle. But right now, that's making this a swing low, which, again, that level, that 1200, is the high from Q1 of this year that looks like we're about to test. All that to say, this is a bottoming pattern on the quarterly chart. That is incredibly promising, incredibly promising. Now, that said, the same way the monthly candle has a long time to close, the quarterly candle has even longer to close. It's got the whole year, right? So we have another more than a month and a half of price action. So this thing could reverse violently. That's what happened with this one. This was a beautiful green candle at one point, and then it went green. And then it didn't quite go red, but like really ugly close. Same thing here. This was green at one point. We know that because of this upper wick. And then it failed and went red, and then we got downside follow through. So a lot can happen. But just if you think about this pattern, I mean, look at this. I hope you can see this. This is saying something like that, and then we made a move like that, and now we're doing this, right? Something like that. This becomes a higher low versus this, right? Now, this is a quarterly chart, so it's going to take several quarters to play out, right? You know, bordering on years. So we're talking about long-term picture here. And this is happening on CPI day. We just had the CPI release, and we've had a bullish reaction. It was already quite bullish. You can see the monthly chart. We've been rallying for a little bit. So this is something to pay attention to, something I'm definitely paying attention to. And we'll zoom in on some of the lower time frames, and then we'll talk about the PPLT, which is an easy way to play this. It's a ETF where you're basically buying spot platinum. And so on the weekly chart, let's kind of see where we're at. I kind of stopped keeping track of these cycles. So we had this weekly cycle low at week 31, and then looks like that was probably a low. So we're probably on week 10 of a current weekly cycle, right? So this would have been a really short weekly cycle at 18 weeks, right? And I'm obviously just doing this kind of in real time. This is really just kind of speculation. Again, as I keep saying, it's about the price action more than it is the cycles. What we know here is this was a lower high, and we went way above that. This was also a lower high, went way above that. So again, we're coming for this high next. And so this is probably week 10. So not super early in the weekly cycle. So that definitely is something to be cautious of, right? Like really all this is saying is this has been rallying for 10 weeks, right? From this low here. And we're calling this a weekly cycle low at 18 weeks, but we can quibble over whether or not it is. We know it definitely is a swing low, right? Whether it's a weekly cycle low or not, we've been rallying for 10 weeks. And so we do want to be a little cautious that we'll, at the very least, we'll see some kind of consolidation. If we do see that, we want to see it at the upper end of the range for sure. And if we look at the daily chart, if we think about where we might be in the daily cycle, and these daily cycles can be really long, right? So you could say this is the start of a daily cycle. and we're on day 49, right? And you can see, like, from past daily cycles can be really long, 75 days, 65 days. So yeah, definitely possible that this is day 50 of what's going to be like a 70, 75-day cycle. All that to say, we're still getting late, right? So we're late in the daily cycle. We're not necessarily we're not necessarily late in the weekly cycle, but we're not early either at 10 weeks. So this is not a breakout that's happening early. And so that is definitely something that, requires some, like, warrants some caution. But this is really interesting move. If we look at PPLT to look at some levels, so again, this is a Sprott ETF that allows you to essentially invest in physical uranium. You can see we had a big gap up today, so we now have a gap between $93 and $95. These gaps tend to get filled. You can see this like choppy mess here. So I wouldn't be surprised to see us fill this gap down at 93. That could be a good buying opportunity. And you'd expect me to make a move back to 106 to at least to get the party started, and then back to retest this like 120 area. So not a ton of upside, but certainly a situation where the risk reward could be set up in your favor, right? If you can catch it down here at like 93, you can set your stop down here like 91, 92. So you're risking a couple of bucks for like 10, maybe even $15 of upside. So that could play out well. And if you look at the weekly, it's the same exact pattern, right? So I'm assuming this has been rallying for 10 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, exactly. And just crossed above the 200-week moving average. That's good to be aware of. And this should be looking at, same patterns on the monthly. So making higher highs. And for PPLT, that next monthly really significant level is around 110. So about $14 of upside from here. So again, you can use that to calibrate your risk reward, how you want to enter the trade, where you want to place your stops. So that's platinum. Actually is looking kind of promising. Let's look at XME. So we don't look at this guy very often. It's the metals and mining ETF. We'll start with the yearly chart, just to get a sense. So we've been making higher highs last 3 years. That's pretty bullish. We had this big long hammer candle on in 2020, COVID, and then we've just been kind of blasting off since then. One thing to be aware of, though, is this massive upper wick means best case scenario, we're just going to end up with an inside candle next year, right? At least to start, right? Best case scenario, it's an inside candle. Well, I mean, best case scenario is we make a new high this year, but more likely, positive to neutral scenario is we don't make a new high and we just kind of stay around where we are here. We can imagine the candle probably opens somewhere here, right? So inside, not making a new low, but not making a new high. So that's not awesome. We generally like things that are trending, right? And if we look at the monthly chart, if we zoom in here, this certainly has the appearance of a bear flag off of this move. So again, not liking this. And this is a perfect example where on the yearly chart, all you see is a big upper wick. And when we zoom in, we can kind of see, is that upper wick really as bearish as I think? Is it possibly actually a bull flag? And you can argue, well, if you squint your eyes, this whole thing is a bull flag of this, right? Just like this was clearly a bull flag of that. And this is kind of broken up. Now, and the other thing that you'll notice is we've kind of held this level here, right? So we had this huge run up from COVID, and then we consolidated for 1, 2, 3, 4, 5, 6, 7, 8 months. And then we blasted up for 2 months, 3 months, and then we've reversed. And then we started to break down, but instead of making a new low below that $39 level, we held it, right? And then we came up, we even back tested it and held again. Now the next significant level we need to get above is, or I should say the zone, is right around $54, $53. That would get us above this kind of consolidation, this what potentially is a bear flag, and get us start to potentially move, to start making higher highs on the monthly chart. We are about to make a new high above last month's high, but again, we're still well inside a consolidation zone. Though, I mean, what does this pay? Yeah, so, tiny dividend. And I'd say dividend is almost never an excuse to buy a stock if it's not sort of trending. But this, I'd say there isn't really an edge here, honestly, right now, until you kind of confirm we are going to make a break above this, maybe back test it from above. So that's your monthly. And if you think about the weekly chart, we've been rallying for 1, 2, 3, 4, 5, 6. So actually, same exact count as GDX, interestingly enough. And so this is definitely not the healthiest looking rally, especially since we're below here. And again, this is just multiple time frame analysis at work. The same way the monthly looked like it was a little bit, not the most bullish. That the reason is because of this weekly, right? The weekly isn't super bullish, and so it's not giving you the most bullish monthly picture. And so this, again, like that, this kind of makes it even clearer. It's this cluster of price action we need to get out above to start actually trending on the higher time frames, right? So that 53, 54 area. So we'll be watching that very closely because that's what you want to see to tell you, things are ready to start to move for XME at least. And if we just look at the daily chart, let's see, where are we in our daily cycle? It is probably day. So this is important. It's day 33, but we have a swing high on the board on day 31, right? So just to be really clear, right? So Tuesday is now a swing high. As long as we're below, we're now back above it. So it was a swing high when we were below 49.42. So that's an important level to kind of watch for because it suggests the weekly cycle decline may be starting, especially since we're kind of late in the weekly cycle, or excuse me, daily cycle. So that's going to be important to kind of watch out for and kind of navigate because you want to be careful not to get caught in a daily cycle decline, especially since, again, this is forming a lower high versus this. Well, really versus this and this and this. So if you're not tracking, this is just creating, right? This is just a pattern of lower highs. That's not good, right? Each of these arrows is lower and lower. That's not good. So we need to kind of break above that to get a sense that we're moving. So that's XME, one that I don't review quite as often. I hope that was helpful. And I think we'll wrap up here. I'd say in general, GDX is definitely breaking out. And so I wouldn't be surprised to see this one move as well. The thing is that this is diversified. It has a lot of mining ETFs in it, a lot of mining companies, I should say, from different sectors. But that's your lay of the land. We looked at platinum and we looked at XME, the mining sector in general, to kind of give folks a sense. So again, hope that was helpful. Thanks for watching.